Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, what's the outlook for food prices in Canada as inflation persists? And it's not in our heads. The economy is weak, and so is the job market. Plus, making cities work takes time and money. Too bad we seem to have neither. That's all ahead. First, for the week that was in business, it's time for the briefs. The November jobs report was closely watched this week for a hint about the next interest rate cut by Canada's central bank. With another lackluster reading on jobs, some will make the case the bank could cut by 50 basis points next week, particularly after a dismal performance for Canada's economy in October. Canada's Auditor General said the pandemic-era emergency business account loans, or CEBA, saw about $3.5 billion go to ineligible businesses from a total of $49.1 billion. Karen Horgan said the loans were delivered in a timely fashion, but that the value for money may have been lost along the way. Bombardier settled a long-standing dispute with Honeywell and simultaneously announced a strategic agreement to collaborate on aviation technology. Honeywell said the value of the partnership could be $17 billion over its lifetime. Performance in the recent 3 months was decidedly mixed for Canada's biggest banks. RBC and CIBC both increased their dividend after beating expectations for profit. Scotiabank's profit was also higher, but missed forecasts. All three banks had less set aside for bad loans than expected, and that can be a sign of confidence in the economy. BMO missed expectations and raised credit loss provisions, while TD also missed and suspended future forecasts as it grapples with U.S. sanctions related to money laundering. Quebec-based Lion Electric has laid off more than half its staff. The electric bus and truck manufacturer is struggling to meet its debt obligations and is examining a range of options, including potentially seeking creditor protection. Food banks in Ontario are cutting back on how much food they give. A report from Feed Ontario noted that more than 1 million people used food banks in the province between the springs of 2023 and 2024. To cope with rising demand, food banks are reducing the amount of food given per client. Lightspeed Technology is laying off 200 employees in what it called a strategic reorganization. It comes after 280 job cuts last April that the payments tech firm said was to focus on profit. And those are your business briefs. The front line of inflation for most Canadians has been at the grocery store, and high prices continue thanks to a weak Canadian dollar that might get even worse. So who are the winners and losers when it comes to pricey agriculture? David Dienesch, the CEO and chief agent at Allianz Trade in Canada. David, thanks for being with us.
Hi, thanks for having me, Amanda.
So I did want to start with the kind of currency impact and overall look at inflation. There were these international factors, of course, that kicked off some of the food inflation that we saw in the past couple of years, including the war in Ukraine. It's not over, David. So do we still see those global influences causing food prices to stay high?
I think what you're seeing right now is you're seeing a little bit more stability in the food prices. We're seeing some agricultural prices come down. But that's not to say that there isn't a problem out there. What we're still seeing is that the price of agricultural products is still higher than it was pre-COVID, and that continues to drive up the price in the grocery store. And let's face it, the geopolitical situation continues to evolve. We see things, it's almost like a game of whack-a-mole. What's going to come up next that's going to have an impact? And I think that Canadian producers are able to take advantage of some of that. But nonetheless, in the near future, we're expecting a little bit more stability.
And I did wonder whether you tracked how that currency impact affects groceries. A lot of the food that we see in the grocery store, certainly in the middle of winter in parts of Canada, is coming from somewhere else, south of the border often, especially fruits and vegetables. Should we think that a weak dollar, therefore, will translate into higher prices at the store?
I think what you're going to see is the weaker dollar is really good for the export community in general. But one of the things that we're seeing is, think about those tomatoes that are going into the U.S. If it comes back as ketchup, that weaker Canadian dollar, you're going to see that is going to start to cost more for the ketchup that's going to be in your grocery store. As a consequence of all of that, you're also seeing that Canadian producers, we have a weak dollar. That means the machinery that we're going to need to produce some of those goods, that is also going to cost a little bit more. The consequence of all of that is Canadians are expecting to see a little bit more inflation when it comes to food in their grocery stores because of a weaker dollar.
And then, of course, there is that producer picture, as you say, also kind of mixed, right? Because it depends on their inputs and their outputs. But overall, how are Canadian producers doing? Is the market strong for our exports?
So Canada certainly has a good export community, and we've seen, despite the unfortunate events that are happening in the Ukraine, we've been able to increase our exports from the agri sector. So far that's been a good news story. But I think in the long run, and if you take into consideration the weakening of the Canadian dollar, our productivity is going to come down. And we're living next to a neighbor who's extremely productive when it comes to this particular sector. So the consequence of all of that is Canadians are going to struggle when it comes to exports in the future. For the immediate time frame, I think we'll be okay.
David, so good to have your thoughts on this. Appreciate your time.
Okay, thank you, Amanda. David
Dienesch is CEO and Chief Agent at Allianz Trade in Canada. Coming up, when it comes to the economy, most of us have a very personal way of relating. We're taking a look at the economic picture, big and small, next.